Welcome to the Money and Wealth Show. Brought to you this week by AmericanManganeseInc.com. Here's your host, Danielle Park.
This week we're coming to you from the Agora Financial Symposium in lovely Vancouver, and my esteemed guest is Mr. Doug Casey, who is an international traveler, author, and investor. You wrote your first book, Crisis Investing, in 1979, which was a blockbuster seller at that time. And you've had a newsletter that's come out for many years since. And I was mentioning to you earlier, the first time that I recall coming across you or seeing you was in an investor conference we were both speaking at in October of 2007 in Toronto. And at that time you were doing a presentation to the audience on the coming crisis and debacle in the stock market, which you fully expected at that point, and the housing disaster, et cetera. So here we are, 4 years later, Doug, and where do you think we are today in the unwinding process of what you saw back in 2007?
I think we're in the eye of the hurricane. We went through the leading edge of the hurricane in 2007, 2008, or 2009, and then these stupid governments and central banks all over the world have thrown trillions of currency units at the markets and at their economies. And of course, this has made everybody feel better and has propped up failing institutions and collapsing markets. So everybody, not everybody, but a lot of people think, oh, this is just another one of these cyclical recessions, of which we've had a number since the end of World War II. More serious than most, but just another cyclical recession. But that's quite incorrect. We've entered upon what I call the Greater Depression. And I call it the Greater Depression because it's going to make what happened in the 1930s and 40s pale in comparison. This is a historic event we're embarked upon, and we're still in the early stages of it.
So what is it about the situation today that, in your view, makes it that much more dangerous or greater in terms of a downturn than even the Depression of the 1930s?
Well, I'd say, like most of what you hear in the media, it's not only not the truth, it's perversely just the opposite of the truth. The reason that we're going into this is because of government intervention in the economy. In other words, it isn't solving anything, it's actually making it worse. What's actually causing this depression is government intervention in the economy, which has occurred in increasing amounts over the last couple of generations, most particularly inflation. These governments have monetized huge amounts of their debt. They pumped up currency supplies all over the world, and that's created bubbles. Bubbles in the stock market, but most and foremost in the real estate and housing markets. This has been all over the world. It's not just in the U.S. The next bubble to break is actually going to be here in Canada. If I owned property in Vancouver, I would hit the bid tomorrow morning. But so the government is at fault for what we have. It's not the solution. But people, idiotically, are going to the government to solve the problem. And we need more regulation. We should raise taxes on the rich people. And all this is counterproductive. So it's going to end very badly. Well, the system today is totally corrupt through and through. I don't even see the possibility of reforming it anymore. But as for regulation, let me shock everybody. It's not necessary. Not only is it not necessary, but it is counterproductive. Because the poor boob out there thinks that because you've got these buildings full of bureaucrats shuffling papers and stopping things from happening and so forth, that they're being protected. Au contraire, they're not being protected at all by these people. All the bureaucrats are doing is costing money to participants in the market and causing distortions in the market. No, the best regulation of the markets is caveat emptor and due diligence on the part of the average person. Taking responsibility instead of thinking that, oh, you've got a regulatory thing that's going to take responsibility for me. So no, I would absolutely abolish the U.S. Securities and Exchange Commission among practically every other agency that the U.S. government has, and their equivalents in Canada, of course.
So before we get to the topic of currencies, which is a very interesting one, if I might just take you back to that comment. I hear what you're saying about government intervention in the 30s bringing on the Great Depression. What role then did speculation and wild hubris and leverage have in that whole cycle? Because if you go back before that, you had a housing bubble in the 20s, peaked in 25 in Florida. That was the last famous episode like that. They all ran to Wall Street, drove the price to earnings multiples beyond the universe. So when you say that governments are what caused the Depression, what role did that aspect of human behavior or hubris have?
It's exactly the same thing that's in back of this Depression. In other words, it was a monetary phenomenon. You have to recall that in the United States, the Federal Reserve was created in 1913. And at that point, they were able to inflate the currency, and fractional reserve banking became the law of the land. And just as this depression was caused, not by the bankers going crazy on their own, it was caused by the easy availability of hundreds of billions, even trillions of dollars worth of credit. And that's created bubbles. That's what caused this craziness. And exactly the same thing caused the craziness of the 1920s.
So in this respect, you would include the Federal Reserve as part of the government. Even though they maintain they're a separate entity, you would include them as part of the problem that is government.
Of course. The government owns half of the Federal Reserve. The other half is owned by some large banks. But for practical purposes, yes, it's an agency of the government. Sure, of course.
So they were instrumental in bringing about the dangerous conditions or the financially precarious position we're in today. We have to take a break now, but I'd like to talk to you after the break about what individuals can do to navigate their way through the type of environment that you're seeing that will last for the next few years, in your view. We'll be right back.
Always consult your investment professional before making any investment decision. You're watching The Money and Wealth Show.
American Manganese, Inc. has a manganese deposit in Arizona. Indicated 6.7 billion pounds. Inferred 8.9 billion pounds. Potentially the lowest cost producer of electrolytic manganese. American Manganese, Inc. has a projected cash cost of 44 cents a pound. The metal trades near $2 a pound. Do the math. Trading symbol AMY. Visit AmericanManganeseInc.com or phone me, Larry Ray, at 604-531-9639.
The Money and Wealth Show is archived online at TalkDigitalNetwork.com. Here's your host, Danielle Park.
Back with my guest this week, Mr. Doug Casey. And Doug, at the Agora Investment Symposium, you were doing, one of your talks was on the topic of the Greater Depression, which is the environment that you're referring to, that we're in today or moving into over the next couple of years, and how that's actually the least of our worries. So what in particular do you see as threats to the individual, and what can they do practically to cope in the environment that you're seeing?
Well, a depression is a period of time. Several definitions I could give you, but the most important definition of a depression is it's a period of time when most people's standard of living drops significantly. And the problem with this depression is that it's going to be an inflationary depression, unlike what we had in the 1930s, which was a deflationary depression. The way you become wealthy is by producing more than you consume and saving the difference. That's the mainspring of human progress. And the people that do that are the best people in society. Unfortunately, everybody saves today in dollars. I know the Canadian dollar has been strong against the US dollar, but the Canadian dollar is just a floating abstraction, as is the US dollar. It's going to reach its intrinsic value just as the US dollar is, and quite shortly. The problem is this, is that dollars all over the world currencies all over the world are going to be destroyed. And that is going to penalize the productive people in society that actually save money. They're going to wind up with no money, an empty basket of money. That's going to have all kinds of social consequences. There are military consequences that when economic times get tough, these people in the government like to blame somebody else. Oh, it's those Chinese that are manipulating their currency. Oh, it's those Chinese that are dumping cheap goods, which is raising everybody's standard of living here, having nice cheap goods to buy. Oh, it's those Arabs that are, you blame everybody for it. So we're going to see more in the way of wars in the future. And of course, the U.S. has been going almost wild with starting wars. They don't call them wars anymore. They call them they regime change and so forth. You're going to see a lot more of that. These governments are all bankrupt today, and that means that they're going to be trying to extract more in the way of taxes from productive elements of society, which is going to hurt business. Everybody thinks that the problems that we've had in the last few years is we didn't have enough regulation. Well, that's just the opposite of the fact. My solution would be to abolish all these regulatory agencies which serve no useful purpose except to make people think they're protected and make them act irresponsibly because they think somebody else is going to take care of things and kiss it and make it better. So
basically that's the kind of a libertarian view about regulation being part of the problem and the cancer on the economy. But as we go back to how we got into this debacle in the first place, when we look at the lack of sensible rules, sensible practices, sensible habits that were so widely popular in our financial sector and the heads of our banks and institutions, these people that were paid so much money for absolute horrendous leadership, in my view, how does that play into this idea that everything can regulate itself and we don't need any sort of government watchdog? You know, when that's sort of the environment they found themselves in the last 10 years, and they were part of what happened in terms of the crisis.
Look, you've had a crazy environment like this because the central banks of the world have created trillions of dollars worth of credit, which these giant organizations are the ones that are able to take advantage of that. So of course it's easy for the guy on top, who's usually very politically connected, and as often as not is in a swinging door between the government, big business, and so forth. One hand washes the other. The whole system is quite corrupt at this point, and I'm not even sure it can be salvaged. I really am not. But the state is the foundation of the problem that we have. Because with having created all this currency, all this credit, all this currency, with having created all these regulations which are distorting the economy, having created all these taxes which really hurt the little guy, it doesn't hurt the big guy so much. The big guy can afford the investment advice, he can afford the accounting, he can have the laws changed to help him. The little guy is the one that's getting screwed by all these things. But he believes that the government is protecting him. It's completely perverse. It's all upside down.
So the whole idea of the bailouts and the bankers being rescued by government and the special interest groups, all that would be part of this same problem that you're speaking about when you're saying that.
Well, of course, it's insane bailing out these large institutions. And the money to bail them out is added to the national debt of whatever country you're looking at. And that national debt is in effect a mortgage on the lives of your children and your grandchildren. They're going to be turned into serfs paying off that debt. So no, these institutions should not have been bailed out. They should have been allowed to fail. And the assets they had should have been auctioned off and distributed. And you start anew. Now you say, oh, well, my account at the bank would be melted down. Yes, well, if you were imprudent enough to keep a lot of money at an insolvent bank and a paper currency, yeah, you're going to be punished. But look, the good news about this is that most of the real wealth in the world, the bricks and mortar, the technology, the skills, that's still going to exist. There's just going to be a period when there's going to be a change of ownership among it.
We have to take a break. I want to speak to you a little bit more about your idea that this is an inflationary environment over the next period of time. I'd like to get your take on the idea that in a world where assets have been unduly inflated in bubble-like pressures, whether it be real estate in Dubai or Canada, how that plays out as those prices come down in your take on an inflationary environment. We'll be back in a minute.
You're watching The Money and Wealth Show.
Molycorp Gold Corp has substantial assets. Magnesium deposit, inferred 52 billion pounds. Molybdenum deposit, indicated 1.9 million tons. Inferred 1.8 million tons at 0.087% MO. Past silver producer, average 182 ounces per ton. Trading symbol, MOR. Website, molycorp.com. Or phone me, Larry Ray, at 604-531-9639.
The Money and Wealth Show is archived online at talkdigitalnetwork.com. Here's your host, Danielle Park.
We're back with my esteemed guest, Mr. Doug Casey, and we were talking before the break, Doug, about your perception that we are headed into an inflationary firestorm, or perhaps there was another word that you were using. And I'm wondering, what I see is a world full of overinflated assets, which in my basic approach, I would think that you have to knock zeros off. That house isn't worth $1 million, it's worth $400,000, and neither are those stocks worth $100, maybe they're worth $50. So that's a deflationary aspect to this asset bubble we're coming out of. How long or how persistent does that act or continue in your view?
Well, this has always been a battle between a catastrophic deflation, which is what happened in the 1930s, which they don't want to have happen again, because they know what happened then and it was not nice. So they're trying to prop up the values of all these assets.
Will they be successful in that, though? Isn't that gravity, isn't that honesty coming to the fore? Those assets shouldn't be carried at those values?
It's highly problematical, where assets are going to fall in value at the same time as the dollar falls in value. It's almost the worst of all possible worlds. I will make one comment about real estate, because I watch real estate markets all over the world, and I've invested in real estate markets all over the world. In fact, I just bought with some friends some buildings in downtown Cairo. So I'm not afraid of markets that are scary, in themselves. More than real estate in Cairo right now, real estate in Vancouver scares me much more. If I had a building here in Vancouver, I would hit the bid tomorrow morning. It's a grossly inflated market. So just a bit of free investment advice for what it's worth.
So more on that theme, if we know we're in a world where asset value overvaluation is prevalent and it's global, basically, across most asset classes today, what does a prudent person do? Is there not an opportunity, in your view, coming at the end of some point, whether it's 6 months, 12 months, 3 years, you tell me, is there not an opportunity coming? And what can a person do now to prepare for that perhaps buying opportunity?
Yeah, well, look, everybody says, oh, aren't you tired of talking about gloom and doom with the Greater Depression and so forth? But I look at the bright side, and the bright side is, over the next few years, there are going to be some fantastic bargains that are going to be available at very low prices, whether those prices are in terms of gold, which is what I've been buying, or some other currency. So if you can keep your assets together during this period of turbulence, you're going to have the chance of a lifetime in a few years to buy when things are much cheaper. You'll be very, very afraid to buy at that point, but sure, it's a tremendous opportunity that's building up. And even before then, these trillions of currency units that all these governments are going to create other bubbles. And one bubble that I think is going to expand is going to be in the precious metals. There's going to be a panic into the precious metals, taking gold and silver much higher. And I hate telling people to buy gold after it's gone to $1,600 an ounce, because I'm a bottom fisher. I like things that are cheap, not things that have already been in a bull market for 11 years. Gold is going higher. And more particularly, I think there's going to be a bubble ignited in junior resource stocks. Now, Canadians are very used to seeing radical fluctuations in resource stocks up and down, but I think that the public is likely to get into these things, and there could be a huge bubble there. But most of them are burning matches, so they're not things you're going to want to pass on to your children, although most of what you're going to be passing on to your children is a share of the national debt, which is going to be an albatross around their necks, which is why I think that these governments ought to default on their national debts too, not just Greece. The United States should default on its national debt.
So in a word, is this the end of the world, what you're describing, or is there a time when we will come out the other side of this, in your view?
No, absolutely we're going to come out the other side of it. Let me reemphasize the fact that all the real wealth in the world, technologies, bricks and mortar, land, this type of thing, it's still going to be here, okay? But what I'd like to see is the power of the state reduced. So yes, I'd like to see the United States and all these other governments default on their assets. And I see it for moral reasons, because it would punish the people that have been lending the money, making it possible for them to engage in these wars and other profligacies. So I see that as being a good thing. And then maybe we can go back to a sound currency system in a free and unregulated society. I'd like to see that. I think there's a possibility that after we come out of the other side of the hurricane, which is going to be ugly, that's a possibility.
And how do we maintain liquidity, in your view? I mean, buying land in Cairo wouldn't necessarily be a liquid park for opportunities once the firestorm comes.
Well, look, I've been investing a lot in South America, because South America is pretty much off of everybody's radar. Wide open spaces, very low, no debt, because they've destroyed their currencies enough. Nobody will lend money in Uruguay or Argentina. And I've been buying productive farmland, cattle land in particular. I'm very happy with that, because let me emphasize one other thing. As dangerous as the markets are going to be in the years to come, your biggest danger is a political danger. It's your own government. So you have to diversify geographically, diversify politically. You can't have all your assets in one political jurisdiction.
We'll be right back.
You're watching The Money and Wealth Show.
American Manganese, Inc. has a manganese deposit in Arizona. Indicated 6.7 billion pounds. Inferred 8.9 billion pounds. Potentially the lowest cost producer of electrolytic manganese. American Manganese, Inc. has a projected cash cost of 44 cents a pound. The metal trades near $2 a pound. Do the math. Trading symbol AMY. Visit AmericanManganeseInc.com or phone me, Larry Ray, at 604-531-9639.
The Money and Wealth Show is archived online at TalkDigitalNetwork.com. Here's your host, Danielle Park.
Thank you very much, Doug, and thank you to Agora for bringing all these minds in one place, and thank you for watching.
The Money and Wealth Show has been brought to you by AmericanManganeseInc.com.